Hi, I'm Ed Fulbright, CPA, CGMA, PFS, a Fulbright Financial Consulting PA. We would like to welcome you to our educational briefing.
The circus in Washington is an incredible distraction, but the fundamental economics driving American wealth continue to show considerable strength. The sideshow does make it hard to stay focused on what's really important. For example, only twice in the 4 decades since the National Federation of Independent Businesses began tracking business owner optimism has its index been as high as April's reading of 104.5. But even the National Federation of Independent Businesses was distracted by the sideshow in reporting the news. NFIB's monthly press release about the optimism index focused on the recent drop in optimism and the sideshow in Washington rather than the more important news from a long-term perspective, that the level of optimism among business owners has been this high only twice since 1975. NFIB's spin makes it difficult to discern that, despite the antics in Washington and the recent drop, small business optimism remained remarkably high. Yes, the drama in Washington, D.C. is sensational, but in economics and finance, the numbers are what matter most, and the numbers are strong. For example, business owner optimism is of fundamental importance because small business creates 2/3 of America's new jobs. So it bodes well for the future that the new job subcomponent of the NFIB Optimism Index boomed by 33% in April. Corroborating this positive data from NFIB last week, the U.S. Bureau of Labor Statistics said job openings in April remained near a record high. Meanwhile, the quit rate remained nearly as high as the level it reached in the last economic expansion. This indicates the labor market is tightening and causes wages to rise. An excellent gauge of the fundamental condition of the economy, and one that is less susceptible to distractions, is the consensus forecast of economists. The 59 economists surveyed by the Wall Street Journal in early May said they expected the U.S. economy over the last 3 quarters to grow by an average quarterly rate of 2.7%. That's an upward revision from the 2.6% estimate that came in a month earlier. What's more significant, the growth rate expected in the second quarter was revised upward to 3.1% from 2.8% just a month earlier. Following the weak first quarter, when the economy grew a paltry 0.7%, economists in early May said they expected a strong snapback in the second quarter. Inflation plunged in April to 2.2%. The inflation rate had surged in recent months, and the Federal Reserve Chair Janet Yellen said in public pronouncements that she was not alarmed and expected inflation would ease. She was right. With the credibility of political leaders being questioned, the steady leadership of the nation's central bank has been reassuring, and this is a fundamental strength of the U.S. economy. What remains most important to your long-term wealth are U.S. economic fundamentals, and those remain very positive. About 85% of companies in the Standard & Poor's 500 stock index have reported their earnings for the first quarter of 2017. Their profits were much stronger than expected, and earnings are what drive stock prices. Despite the sideshow in the nation's capital, America's largest publicly held companies dropped by just 1/3%, and the S&P 500 remained near its all-time high. The stock market could suffer a correction of 10 or 15% any time, but investors have discounted the circus in Washington and remain focused on the long-term strength of the U.S. economy. That's probably the most important fundamental driving your wealth and family finances, and is the best news of all.
Thank you for listening. Please contact us with any questions, and also contact us if you're interested in our complimentary second opinion on your investments or to set up a meeting regarding your wealth. Don't hesitate to share this video with people who might benefit from our work. Thank you again, and have a great day.